Hey guys, this is Madaz once again, and today's video is going to be about a very important topic, and this is one of the topics that causes a lot of losses for people, and definitely it caught me today. I made my life really unnecessarily difficult by falling for this trap this morning, and basically what I'm going to talk about is pretty much fake breakouts, choppy action, and pretty much how to recognize them, how to avoid them, and how to wait for the actual breakout or breakdown to finally happen, and then finally we'll actually have a trade as opposed to just getting chopped up. So today's action on the SPY was pretty much very choppy in the open. As you can see here, this is today's intraday chart. And what got me to think that it was going to be very active at the open was the pre-market range. As you can see, SPY gapped down about a point and a half or so, and it had a pretty decent range pre-market, and it was already gapping down. There's decent range, and UVXY rather was gapping up rather nicely. It was one of the larger gaps I've seen on UVXY in a while, and it had some pretty good pre-market action as well. About almost a $2 range, $2 range-ish pre-market range on UVXY, and pretty much this led me to believe that the open was going to be very active and provide us with a lot of opportunities. However, this turned out to not really be the case. As you can see on the SPY chart, we were stuck in a range between about 202.80 to about 203.80 with the one attempted fake breakout above 204 and then slammed right back down. So as you can see, it kind of never moved in either direction with any conviction. Every single time it tried to make a move up, it was followed with a reversal candle in the other direction. For example, this candle right here, this green candle went from 203.05-ish all the way up to 203.8, and the next candle slammed it back down to 203.4, and then the next candle after that slammed it right back to 203.8. And this is pretty much the recurring theme throughout the entire morning. And I would try to, play this kind of move and think that it's going to go to the upside and then get chopped up by seeing this thing slam right back down, and then try to go short, and then it gets slammed right, and then it gets pushed right back up. And then this little fake move to 204, and then I tried to buy the dip, and then it tanked all the way back down to 202.8 within the next 30 minutes or so. So it was very dangerous to trade this action this morning. It was just a lot of fake moves, a lot of fake outs, and it just looked like a lot of the market makers were just taking advantage of people trying to chase the moves by just slamming the stock back down. So when you see something like this, you really got to learn how to avoid this. And like I said, I myself got chopped up in this, and as you can see, it reflected on my profit loss on the day. So how do you recognize this? So you really can't predict that it's going to happen beforehand. However, if you see that the stock is in a range and you see a lot of fake attempted moves get slammed back down repeatedly over and over again, you should probably take your lesson from the first couple of losses and stop trying. So this is my mistake. I was just thinking that because of the pre-market volatility and the nice volume on the day, that we were going to get a nice move within the first hour or 2 hours, and that didn't really happen until 11:30, 12, and that's when we got the first nice downtrending move here, where it was an actual legitimate breakdown of the morning support level around 202.8. We saw this thing push lower toward the low 202s, and then we got more chop right here. Again, the big red candle followed by the big green candle. People chasing this breakdown on the short side get slammed right back up, and they get squeezed back. And same thing on the long side on this attempted move. Looks like it was going to regain 202.8. And then nope, they wicked this candle, slamming right back down, and then now we're stuck in a new range. And then this was a pretty brutal candle. Nice green candle. Went up to VWAP. Pretty much went from 202.7, goes through that 202.8. People were thinking this thing is going to go up. Nope, gets slammed right back down. And I actually took a small position on this, on the short side on UVXY to play this move. Luckily, I only did 100 shares, so it wasn't that bad. But nonetheless, I thought this was a pretty brutal, dirty move here by the market maker, slamming this thing right back down immediately with the next candle. So overall, there really wasn't any good risk-reward trades. Of course, I'm speaking from hindsight here. The only good risk-reward trades were this breakdown right here from 202.5 down to 202, pretty much 202 flat. And then late in the day, when SPY went from off of this fake breakout, screwing over all the people chasing on the long side, and then it dropped from 202.8 down to the lows of the day of 201.5. So these were the only good setups. These two moves right here were the only two good setups where you technically should have been trading. Of course, I'm speaking from hindsight, but how do we avoid this moving forward? We can avoid this moving forward by pretty much observing what the action looks like, what's going on. Are these breakouts actually legitimate? Are they actually going to push it higher, or are they slamming it back down? Now, this is trial and error, of course, and like I said, there's no way to kind of guess it beforehand. But if you try once or try twice and you see that's not working out, you should probably leave it alone until you see something with conviction, such as a move below a key support level and it stays below there. And any attempted retest, such as on this green candle where it tried to retest 202.8, gets rejected and goes back lower. Or on a breakout in a similar scenario, just reverse. So late in the day, we saw this breakdown here below this 202 level. Attempted retest here, attempted regain of 202, 202's 202.2 here, and then it got rejected, went down to 201.5. So this made for a very good trade. As you can see on the corresponding move on the UVXY, you can see that correlated very well. UVXY broke out, premium accumulated, and it went from 37.6 all the way up to 41s. And then it got chopped up late in the day as well. Once the chop resumed, as you can see right here, when SPY pretty much was stuck between 201.5 and 202. So as long as you can avoid the chop, as you can see here is the morning chop on the UVXY, up, down, up, down, up, down. And then our first decent move here, followed by more chop, and then a second decent move. So the only decent moves, like I said, from here, from 11:45 up to about 12:30. And about right here from 3 to about, pretty much the close, but toward the end it got really choppy as well. Other than that, the rest of the time was not really favorable for us to trade. And like I said, the only way for us to figure this out is you got to observe the action, observe the level 2, observe these breakouts or breakdowns, and you just got to see whether or not they're genuine or not. And if they keep slamming it right back down, right after making it look like it's going to break out or break out or pop it right back up if it's about to break down, then you got to kind of take a step back and sit on the sidelines and say, hey, they're screwing with people here and they're trying to just shake out all the chasers every single time. So until you see an actual move where it goes below the support level and it back tests it and it doesn't regain on the short side, or on the long side it goes above a key resistance level and it doesn't fall below it and it stays above it, that's the only time you should be pretty much looking at taking a position. And that really reflects on, especially on UVXY, because UVXY is pretty much based off of panic. So if you see a huge move like this, it's because there was a nice move with conviction. People start freaking out, and as you can see, it corresponded with this low of day crack on SPY. Alright guys, so I'm going to go ahead and show you guys some live footage. So, I mean, I could talk about this all day, but it's a lot better if I show you guys the footage that I captured. The footage that I captured was around this time right here, about this little 30-minute time frame. So I just want to illustrate this little choppy action right here, more or less. So, like I said, SPY had just attempted to break out above that 202.8 level, which was previous support, and was acting as resistance on the top end of this range. and then they broke it above it with a really nice green candle, nice volume, 1.5 million shares. And look what happened on the next candle. It looks like a VWAP slam. Red candle, almost just as big as green candle. All these people chasing this green candle got screwed, and the subsequent candles reflected that SPY could not regain 2.8. Rejected. Got a little bit of a descending triangle right here, and boom, gets slammed right back down. So the footage that I'm about to show you guys is to reflect why this was not a buy here at support. A lot of people might try to say, oh, okay, I'm going to buy here to 2.4 because it's holding here, and it's going to go right back up. Well, the reason why you don't, or even try to chase the short for that matter, is because of these alternating green and red candles. This pretty much illustrates that the stock is still choppy and that you gotta wait for a move with conviction and then a backtest rejection for a safe high risk reward play. Okay, so I'm going to show you guys a video. Now this is kind of a long video, but hopefully it illustrates the point. It might get boring from time to time, but you guys are more than welcome to skip through it. So we pretty much start off the video here at around 2:47 Eastern Time. Again, guys, SPY had just attempted to break out, and now we're pretty much just sitting on the sidelines, like I said, looking for the next trade. I'm trading UVXY based off the SPY action, and right now it's pretty much a no trade, and it will be no trade for a while, as you saw what happened to SPY later on when it finally did decide to break down. But right now, alternating red and green candles. Any attempted breakout gets slammed. Any attempted breakdown gets bought up. So if you attempted to trade this, you're going to get chopped up and shaken out your position over and over again, and you're just going to be pointlessly giving back profits. So, like I said, this video is to illustrate to you guys when exactly to look to enter position and when to just do nothing. So right now it's SPY is just pretty much stuck in a 30-cent range. Very much an impossible situation here to trade off of. Got a back test of that lower bound on this range right here. Now I want you guys to pay attention and watch how they make people think that it's going to tank, and then they just rip it right back up, and they do the same thing on the upside as well, as if they're pretty much deliberately trying to get people to chase and trying to collect all these people trying to chase the move. They get really excited, they get impatient. After such a long period of consolidation and sideways, people get really anxious. As you can see right here, it's cracking below it a little bit. Some people try to chase it a little bit there, and look at that, the bids pop it right back up above 50, and they pretty much did this the entire day, aside from those two legitimate moves that I talked about earlier in the video. Pretty much very typical market maker games that you would typically see. And again, you gotta understand, the more that people chase, the market makers see all the orders, and they can take advantage of these people. They see a ton of people trying to chase downside move by shorting this breakdown. They rip it right back up with those bids, and those people have to cover. So you're gonna see this happen on SPY for the next couple of candles. And then if you try to match this with the action on UVXY, if you attempted to chase a UVXY long, I mean, UVXY is capable of dropping 30-40 cents in a couple of seconds. So you chase the long, you're going to be down to quick 30-40 cents. Not a really good position to be in. So you really got to be patient, as I found out the hard way this morning. Very big difference between when it's easy to trade this action and when it's hard. So again, if anything, this video should be a very nice reminder to myself to understand that you gotta really wait for the move to materialize and some continuation for a good solid trade. We do see some premium accumulation here on UVXY. Again, this is by in part due to people anticipating that SPY is going to break down. So they're pushing UVXY up by chasing it a little bit here. And like I said, UVXY is capable of dropping 30, 40, 50 cents on a dime. So if you are one of the people buying 38, like right there, 38.10s, and SPY just made a candle like it did right there by just ramping up to 75 in one split second, you're going to be looking at a quick 20, 30, 40, 50 cent loss depending on how badly it decides to drop on you. So you got to really be careful not to chase these moves and to wait for them to materialize. I can't stress this enough. I mean, if I realized this in the morning and acted on it properly, I would have $6,400 more in my account. So again, trying to illustrate this point loud and clear so that you guys don't fall into the same trap that I did. It's really easy to see in hindsight and after the fact, but once you're in the moment and you're trading live, it's very difficult to see sometimes. So do you see that green candle on the SPY? That was a really nice volume candle. Over 1 million shares traded on that green candle. Got some longs hoping and believing that it was going to break out. Nope, they slam it right back down to the 50s and 60s on the next red candle. I mean, it's just absolutely brutal action right here. It's just complete definition of what chop is. Get people to think that it's going to move up, slam it back down. Get people that think it's going to move down, and then pop it right back up. I mean, looking at the flip side on UVXY, think about all the people that try to short UVXY on that pop on SPY, thinking that SPY was going to go back to the VWAP test around 203s. I mean, they just got ripped on 30 cents right there. So again, pretty much you cannot trade this action if you want to consider risk reward and pretty much understanding that right now it's pretty much a lot of uncertainty in terms of what's going to happen next. The only thing that's a little bit certain right now is I can conclude that UVXY is having an easier time moving up than it is moving down, because there is some premium accumulating. The UVXY at this point in the day is up 24%. So one of the larger moves on UVXY in recent memory. So there is a slight bias to the downside action on the market. More people are probably presumably thinking that SPY is probably going to crack that 202.5 level sooner or later. But still, like I said, there's no trade for the time being. Looks like another attempted breakdown here. 202.5s. Test again, dropping down to 202.4s. But still no conviction on the move. As you can see before, around 11:30, between 11:30 to about 12 o'clock, when SPY wants to go down, it will go down. It is making a move from 202.4s down to 202s on that move. So SPY on the day has shown us that it's capable of making a strong move with conviction to the downside. And right now we're just seeing a lot of attempted breakdowns, but they're just holding it right back up around this 202.5 level. And it's really difficult for people to understand why they're doing this. But it's not so much the why, but so much that you just gotta understand that this tells us that you cannot trade this action. There's no edge here. You gotta wait for the move. You know, a lot of people get that fear of missing out, as what the popular term is nowadays. So they jump in early, anticipating the move. But a lot of times you're gonna get screwed doing that. And like I said, that's what happened to me this morning. And that's why I'm making this video, to really make this point loud and clear, that you just simply cannot do that. Even if you do that once in a while and it moves out in your favor, you're gonna catch a bad break one of these days, and you're gonna get smoked in the opposite direction. And especially if you're trading UVXY, like I said, it can reverse on you very violently in a very short amount of time. So as you can see, SPY there, another attempt at 202.5 breakdown, and it's not breaking down. So still no trade. UVXY back test of 38s. And yet another attempted breakdown. Seeing a little bit of lower highs on this little chart, this little range here on SPY. So we got a little bit of a descending triangle kind of formation. So like I said, based on this action, more people are favoring the downside on SPY as opposed to the upside. But still, we still gotta wait for the move. You still don't know that it's gonna drop. They can still rip it right back up and screw over all of these people trying to guess the move. And you'll see it's a lot easier to trade it after the move has happened, after the move has become evident, after the direction is very clear and distinct, that the stock becomes a lot easier to trade. And UVXY, as you saw late in the day, made a move to 41 from this 38 level right here. Right now, you would get chopped up pretty bad if you're in UVXY. I mean, SPY barely made like a 7-cent move, 10-cent move, and UVXY dropping almost 30 cents off of that 38.15-ish level. So anyone chasing that move would be down an easy 30 cents right here. So still a no trade here as UVXY dropping into the 70s. And SPY going to the 60s. Now the longs are starting to believe again. So literally just in a matter of minutes, it went from looking like it was going to drop, and all of a sudden they're going to spike it right back up on the next candle, about 20 cents on the SPY, and on the UVXY it drops 50 cents. So there you go. I mean, if that's not a loud and clear example to not chase the move, I don't know what is. So as you can see, based on my positions, I'm still sitting on the sidelines, just watching and not making any trades, taking a lesson from my mistake this morning still. UVXY dropping to the 50s there for a second. So now let's see how many longs the market makers can get to believe that this thing is going to go back toward the highs, at least the top end of this range, and see how badly they can screw those guys over. So SPY just made a move, pretty much a 20-cent move. Given that the range right now is pretty much a 30-cent choppy range, a 20-cent candle is pretty significant. But you can see here that the UVXY chart does look pretty weak. Double topish action. So it's reasonable for some people to believe that this is probably going to go down. However, like I said, with the market still being very, very choppy and stuck in a very tight range, you really, really shouldn't be trading this at all, like I said. Now SPY just dropping down, back down another 15 cents. And UVXY popping 20 cents. So anyone attempting to chase that breakdown thinking that it's going to go down to 37 on UVXY is now down 20 cents. And again, this is just to really, really emphasize the point that this stock is so much easier to trade. SPY and UVXY, depending on what you trade. It's so much easier to trade once you see the move become very, very apparent. So in this case, we pretty much need a breakout above 202.8 all the way up to 203s, and a 203 break to 203.5 and a 203 hold on the long side. So there's a lot of things that are holding down the long side of the trade, which is probably another reason why people are anticipating the short side being the more likely trade here on the market. But still, we don't see any conviction yet. On the short side, we want to see a clean breakdown of 202.5s into the 202.4s, and that SPY stays below 202.5 and doesn't reclaim 202.5s with those bids propping it right back up immediately. So now we're seeing a little bit of a push down. So let's see if it reclaims 202.5 or does it stay below. Now, I also observe the UVXY action to see how much conviction or how much people believe that the move on SPY is more legitimate. So we see UVXY, look at that, a huge red candle followed by a huge green candle, so about a 50-cent move. So anyone that chased that downside move thinking that was going to drop because for whatever reason they may justify a double top chart or whatever, they're down 50 cents if they didn't cover their shorts. SPY now dropping to the 30s. Now let's see if it reclaims 50. Like I said, I'm still not convinced at this point. UVXY still around 38.15, so that's pretty much where it was before the red candle. So right now what I'm looking for is a 202.5 backtest and reject to confirm that this move may be a legitimate move. UVXY about 15 cents or so away from the highs of the day. So traders are now starting to believe that the downside move is becoming more and more powerful, and the longs hopes are starting to fade here on the market. But still no trade for me. Like I said, I'm still waiting for that 202.5 back test. Really don't want to get chopped up anymore at this point after what I experienced in the morning. Just really want to take the highest percentage trades and the obvious trades before anything. And do note that it's also past 3 p.m. Eastern on a Friday. So that's pretty much when it gets really nutty and really wild and volatile. So it's imperative that you downsize your positions on a Friday in the last hour, because the range can get really wild and you could potentially gamble away all of your profits on a day, and if perhaps even the week, if you don't know what you're doing. So be really careful. I'm going to be scalping pretty much with 100 shares from this point on. I could post it on Twitter, and the example scalp that I do at the end of this video is going to be just 100 shares, because I didn't want to completely miss this move, but since I've recovered very nicely from the morning, I really didn't want to take any risk by putting a huge position on the line this late in the day and potentially get pushed around by the market makers or whoever it is controlling this action. But right now we see that UVXY just made a new highs of day by about 30 cents-ish, 25, 30 cents. SPY now looking like it's pretty clear that it's going to go to a 202 test, low of day test. But I'm still looking for a bounce on SPY to get in on UVXY on the dip. Still not going to chase this move, because you never know, they might throw a 40-cent random green candle at you and have UVXY drop back down below 38 on a dime. So right now I'm just being very cautious. Like I said, they've been screwing with people all day, and I wouldn't completely count it out that they might not do it again. So here we go, the 202 back test on the SPY. More highs of the day on UVXY. There we go. New low of day, 201.99. At this point, I'm willing to take a smaller chance by maybe longing UVXY on a slightly smaller dip on SPY. I wouldn't expect it to rip 50 cents that quickly, especially since it's made a pretty nice move with conviction on the downside. But ideally, still looking for a 202.5 backtest. but I'm willing to accept maybe a smaller pop for a scalp if I'm doing just 100 shares. Of course, if you're doing a larger position, you might still want to wait for a higher risk reward trade, but 100 shares and a strong move like this could maybe afford to take a slightly riskier trade than normal with a smaller position. But right now, SPY making more lows. 201.9s, new low of day 201.93. We got UVXY flirting with 39. Still looking for that nice green candle, nice little pop on SPY to get long on UVXY. Nice volume. Largest red volume candle on SPY in a while. Here we go. Maybe a potential pop here. A pop to 202.2s could be acceptable for an entry on UVXY on the long side. Here we go. I think I enter a position around here. There we go. So there you go. I entered the position 38.52. 62 rather. Maybe should have gotten filled in the 50s, but 100 shares, not a big deal. But the idea here was SPY was going to give a nice little pop. And the reason why I picked 202.2 is because there is a little soft support level right here that I didn't draw the line for. So I was going to add 100 shares here, and if it went to 50, I would probably added another 100 shares on the long side on UVXY. So looking for a quick pop back. This is just 100 shares, not a big deal. So I'm just going to take, if it makes a nice move back to the upside, going to take the lunch money. And hopefully this trade illustrates my thought process going into this trade. So again, you would probably manage this a little bit differently if you did 500 shares or 1,000 shares. But with the 100 shares, I can afford to let this thing go, let SPY backtest even 202.5 and add another 100 shares. But right now, it's looking pretty good here. It looks like it's not going to go back above 202.25, and you're probably going to get slammed right back down. So now, at this point in the day, I still believe that SPY could have potentially held 202s, given that 202s was a pretty key support level. And it looks like I just sold my position there. I was just explaining why I was going to sell. 202s was a pretty key support level on the daily chart on the SPY. If you look at it, the last time SPY had a drop, it bounced off of 202. So I kind of figured it might hold 202s. So that's why I decided to sell my UVXY here for about 35 cents or so. I mean, not much, but it was a nice little quick scalp, potentially on a possible 202 hold. And it turned out later on that SPY did not hold 202s, although it did close around there. They did wash it out to 201.5, and UVXY subsequently went to 41. So I did sell my position a little bit too early, but I did end up scalping it later on dips and just kept making the same trade over and over again, selling it for 30, 40, 50 cents here and there. So that was pretty much my rationale on the trade. Like I said, don't chase the move. Just wait for the dip. There's always going to be dips. And if it doesn't dip, you know what? Just let it go without you, because you really don't want to be stuck in a position where you're just going to be chopped up and you get trapped into market maker manipulation and get grinded out for 30, 40, 50 cent losses over and over again. And that's the whole point of this video. So this footage should be ending pretty soon. Yeah, 3 seconds. So hopefully you guys get a good understanding of what I tried to, what the point I tried to get across in this video. The the idea was to try to see if there's choppy action and recognize it, how to understand to sit on the sidelines and avoid the chop, wait for the actual move with conviction to materialize, and then subsequently wait for at least a little bit of a reversal and then get in on that. Don't even chase the move. Okay, so as you can see, SPY was choppy for a good 30 minutes plus, possibly even 45 minutes. And then once it finally decided to drop, it made a pretty legitimate drop. And then I didn't chase this move down because SPY was capable of screwing people over. As you can see on this green candle, it slammed it right back down with this red candle right away. So the pattern was people that chased were often punished. So I wanted to play it safe and told myself, look, this thing's going to move down. It's picking a direction. It's picking a downward direction. I'm going to wait for a pop back up to continue my short bias on the market. Okay, so SPY ripped below 202s. Looks like it took out the stops at 202. Nice little red volume candle. Regained 202s. Got the longs thinking that I was gonna hold 202s. Ripped to the 202.25, and that's when I took a long on UVXY. Pretty much got really close to the bottom of this wick here. The lows were around like 56, 57, 58 or something like that. I got in at 62, so pretty close to the bottom, and it popped right back up, and I sold it around 90, 95 or something like that. So always wait for a slight reversal and then get in on that. Don't chase the move, guys, because more often than not, you're going to get screwed over because they're always going to do some sort of manipulative move and chop you up. So that's exactly what happened to me this morning, and hopefully this video illustrates how to avoid that and how to pick your spots. Alright guys, I know this was a long video, 42 minutes now and running, so I'm going to go ahead and end this. It is a Friday. Hope you guys have a wonderful weekend, and hopefully this action with the UVXY closing in the 40s, that's well above that 24 floor like I mentioned in the previous video about UVXY, that we're going to get some pretty nice action on UVXY. Just got to learn how to avoid that chop, wait for the moves with conviction on the market, and UVXY will become a very, very easy ticker to trade. So keep in mind, guys, Fed announcement on Wednesday, whether or not they're going to raise rates. A lot of people thinking they're going to raise rates. So that's going to heavily impact the market and also UVXY and any index-related, market index-related tickers. All right, guys, thanks for watching. Hopefully you guys learned a thing or two. Definitely I learned a thing or two today. This video will be a reminder to myself and hopefully be a reminder to you to wait for the real breakout and breakdown and not get chopped up. Thanks a lot, guys, and we'll see you guys on Monday.